Greetings, market rebels. Welcome to this week's sector situation. It is Sunday, February 11th, 2020. Oh, four. How did that not get changed? Oh, 2024. So I'm behind by a year, I guess. But anyway, we'll fix that. It is a little bit after 12:50 here on the East Coast. I'm Wayne. We're going to get right into it. Just finished a little while ago recording macro measure. So here's our trusty disclaimer. Here is our trusty intellectual property rights notice. And then here is our trusty macro measure and sector situation setup for the week. We did separate videos for the first time in a while. Just going to leave these up there. That's mainly what I recorded in macro measure. Just a lot of stuff, but kind of kept the notes minimal. I'm still on going through an office refurb situation. So I'm going to stop the share briefly and we'll get started with the charts because we covered all the other big stuff in there. Let me just do escape, and this should be, I thought I fixed that, but I guess I didn't, the 2024 thing there. So let me put this down here and let me get the share going again for everybody. Should start out just with screen 3 share, and that should do it right there. So this is usually where we start for sector situation with a look at 12 piece sectors. There are other things that we look at. We will definitely try to get to those as well. As I noted in the macro measure video, because we cover the major index ETFs, I think it's maybe a good place to start in terms of talking about IWM and how that relates to all this. Okay, I may have had a little hiccup there. I'm not sure what happened. Let's see if we can get this going again. Share. Looks like it's working. I think, is it recording? Okay, recording seems to be working. So sorry about that. Not sure what happened, but this is something that a lot of folks have been talking about. We covered it in the fact that you broke down here on the IWM daily chart. You broke down below the rising 50 there in gold and sort of below the midpoint of this channel that it's been operating in. But notice how the gang did a great job of faking the breakout, reversed it, held it right that day, and then on Tuesday they really reversed it back up, kind of stalled there on the 20 SMA in blue on Wednesday, but then they burst through there and the channel resistance line on Friday. And so this could end up being a completely false double top or even a false breakout, whatever you want to call it. Who knows? Could also be a legitimate break. Now, it sure looks like I'm getting all kinds of trouble here from Zoom again. Luckily, I guess I got through macro measure. My gosh, it's really getting frustrating though here. I hope this works. So we got the breakout of the above the resistance line. Like I said, possible double top. We don't know yet, but there are some good signs in terms of a false breakout, B, a higher low. Right, this high here cleared out some of those highs. We're close to making a higher high, and then the lag between IWM and some other notable names, mainly right the Qs or the spiders, is dramatic, right? It's really dramatic now. And IWM is well below its all-time high, whereas those are printing all-time highs. So no, that's nominal. That's not really inflation adjusted, but all that does is add on to the fact that the major index ETFs could be even higher, right? If we adjust for inflation just to get back to the all-time high. And so that's actually, to me, like a little bit on the bullish side that you haven't really made a new real all-time high. But look, you're way below this high still, right? You're good. What would that be? $40. So you're a good 20% below there. A little bit more than that. Looks like 22% ish. So anyway, this is bigger picture monthly, and you can see the consolidation in IWM. So with these smaller companies really maybe being on the verge of putting it together, unfortunately, they're picking a time where a lot of the rest of the market is already overbought. We're super frothy in some places, just frothy in others. But the reason I'm going into this is because this is one of the missing pieces, along with, for a lot of people, I think, myself included, I would feel a lot better about things if these guys were participating in this rally and it wasn't as narrow to the extent that it is narrow, and it would widen out. Now, we did have a similar situation happen, I think, really like almost like a year ago, where we saw certain things beginning to get bullish. They started working really well. They led, the rest of the market really trailed, but then things started falling into place. And so that could be happening. And that's why I led in with this, because if we look at the sectors, should it allow us to look at the sectors and not crash on us again? But things, and I'll go into the bigger charts so everyone can see them, but I've been saying I'm a little concerned that transports aren't really working here. Well, they had a really good week, right? Financials are right below the highs. They're hanging tough as well. XLI is barely off of a new high, barely off of it. So there's some really good signs there where, I mean, the XLK and XLC have been your top dogs. And there was some paper, I think we did not get anywhere with it on Friday. It was a big reversal, but there was some paper in XOM. And until really Friday's super disappointing session, even XLE was starting to look a little bit better. So a lot of the stuff that I look at and have been waiting for to see if it would do better, including XLY discretionaries, that had a very good week as well. So that's why I'm saying that, look, with IWM starting to perk up again, maybe right on the verge of something, and these also having good weeks and looking better, some other areas that could break out with just a little bit more effort, even potentially problematic areas like real estate. This stuff's all on the verge. On the flip side, staples came off, right? So that's kind of a good sign that they're rotating out of staples a little bit more into the discretionary side of things. So that's a little bit more of a positive. But I think your big positive was, for me at least, was XTN really starting to get back into the game. And it's well off the high still visually, and it's also really lagging other things. So if that starts to catch up, that's really good. As I said, the financials themselves look pretty darn good. So I'm going to pull this out of our way. We will go through these now on a larger chart here. Let me just make sure that what I'm showing here is working, because I'm a little gun shy here with this way the sector situation recording's been disrupted a few times. I think everything's good though. Let me just make sure that my audio settings have not. They do seem fine. I hope this works, but we left off at IWM there. So let's talk about, we'll jump around, but we will look at the fact that a really good thing happened in the form, I think, of XTN, right? So XTN has got a 60 reading on the daily RSI, and you could see it kind of had that corrective action. It's in an uptrend. I'd call that more of an intermediate term uptrend for now. And this uptrend is, maybe, I don't know, a month or a little less than a month into it, and it's making new highs, clearing out highs of what they did. So that's a good sign. Could it get back to here? Sure, it could. Could it keep going? Sure, it could. Where could it go to? We should maybe try to put a number on that. But if transports are doing that, I think that's a very good sign. Old school stuff, but a good sign. I mean, if they're moving products through materials through the economy, and that to me is a good sign. Let's see here. And it was a little worrisome, but again, they might be front running a lot of really good news, but they might end up, all these people that are going this haywire to buy stocks could end up being right. Again, I'm not predicting that. I'm just saying they could. So let's see here. We've got a high that day of 85.29. Yep, 85.31 is the one we want. 85.31, and then this one here is a low of 76.30. So let's get that projection to go there. So even just on that projection, this thing, it says about nearly 95, just with a simple, is very simple projection. If this were to be able to take out this high, break out, attack the all-time high, continue on, like a lot of things have done. For example, kind of backtracking, sort of, with SMH, right? SMH is really getting close to the 100 projection that I've been working off of. So just gives you an idea. Now, getting back to XTN, so this is a good sign. The weekly charts, it's probably worth looking at there, but they're probably going to look pretty good on RSI because, right, this just really starting to leave a consolidation. So they backed off from being overbought. It's been about 5 or 6 weeks of sort of pullback to pause, and now you're at 59 on RSI. So there's plenty of room there if they really want to get a hold of that and take that up. So there's really not a lot to worry about in terms of overboughtness already. That means if it's got the potential without really breaking a sweat and really having to run on the treadmill, it could really get going. XLY, I think with the change that it had, is also worth noting. And I think it's going to be similar. Right here, we have a similar reading, I think, on your dailies there. And it's a similar chart in that way, right? Where it sort of was consolidating after a nice run. Let's get more daily data in on this. And you can see that it had a nice run, consolidated for really longer, though, about a month and a half to 2 months is more. And then, it started to break out. It's approaching, right, the all-time high. And I'm not going to draw extensions and price projections on all these, but 148 to 182, that's going to give us about $34. The low here looks like about, we'll round it off to 170. So that puts you at about 204. There's a nice number to work from, that if they really do bust this out. Again, it's just one of the many different projection approaches you can use. That's a very simple, quick and dirty one, which is why I use it, especially in videos, because it just helps. But it just gives you an idea. There's a lot of potential here in these sectors that did not keep going. They had a great finish to the year, right? The way so many things did. But these are helping this market look better. They did last week. And now, right, if they take out these highs, they're really going to have things look better. XLI, this has been another area that's just been, right, kind of like, I'm scratching my head. I'm not so sure. These are can be big ticket type purchases, and some players are making with loans and with rates having done what they've done. But look, the charts are still really good. If you want to get worried about it, you could say, well, wait a minute, isn't that overbought? It's pretty close, right? I think if you look at it on a daily basis, it's right near 68, 69. So yeah, I think you got to be a little concerned about that. The weekly basis is very similar as well. So you're at 69 there, so you got to be concerned about that. But on a monthly basis, kind of like the major index ETFs themselves, it still has room to go on the monthly. And so if you're kind of thinking really, really big picture, which is one thing I've been mentioning and try to mention, really big picture, it still has a lot of potential if it wants to really go all the way. And so maybe you have a little bit of a hiccup, like I'm saying. I think we should have a market hiccup in the next couple of weeks. I would think maybe before the end of February, just because you are, like I said, frothy in some ways and then super frothy in other places. There's some real rarities that are popping up. There's some real extremes. There's some real stretch. But I don't think without news changing, really dynamically shifting the market and some major news development, I don't see why we would have a crash. And that would probably take some kind of a banking system, financial system issue that crops up somewhere, defaults that trigger other defaults or things like that. But you get the idea of it. I don't see why that we would suddenly just crash. There are massive divergences where things are getting to that point where I could see why a crash argument could be made. I could see why a crash is more likely to happen than many other times. But I don't know, as of right now, I don't know what this is going to cause the crash. I would always look through the financial system. It seems like it always starts there. But XLI, I mean, just nothing that's just obviously a strong sector, and these are just not things that you expect to see, uh, right, within a higher rates environment. The other thing, since we're near it anyway, is XLB. I think this is interesting because this would be another one where if materials start to go, that would be another positive part of the argument that, yeah, this is not just this really narrow rally. Now, I'm just repeating myself, maybe from earlier in this video, but certainly from the other video, that this is what we saw, I think, at the end of 22 and then into 23, where it was initially very narrow. All the typical darlings were really leading, but then a lot of other things started to come along for the ride. So people that had problems with what the market was doing, and I myself was a part of that, not a person who was shorting it naturally, but just someone saying, like, look, this is not the healthiest rally. We'd like to see this and this happen. And then they started to, and they pretty much got everything involved, uh, through last summer. And then, as we said, at the end of last year, they had everything looking really stellar. Doesn't get much better than that. In fact, it hasn't been better than that really since then, because we've had other problems develop here and there. But they're starting to pull things along, much like they did in 23 now, and they're on the verge of busting them through. So again, if they kind of ease up on some of the big names, let some of that stuff cool off a little bit, they might be able to keep things going simply by broadening things out, as long as they don't sell the heavyweights off in a big way, which, again, I don't know if that would happen without a news story. I'm not so sure that you'll get that until NVIDIA does its EPS reaction thing, excuse me. But you're really neutral on RSI, where almost wherever you look in XLB, and that makes sense given look what it's done right over the last several weeks. So the last month, really, it's pretty much gone nowhere. So in a more narrow range, but that's an area that could perk up, and that could obviously help things. And it's starting to look a little bit better. I think it's really close to breaking out. So watch that high from the week before last, and if you can get through that high there, and the market's still going, you got to keep your eye on that. We did look at XLP. We did look at it briefly, but look, that's good. That's, to me, is good that they rotated out of that into XLY for the market overall. This is not a great trader, so I'm not going to spend much time on it. The fact that XLV also pulled back a little bit, probably not a bad little sign, like that it chilled out while other things started to go. Probably a little bit extreme there, right? You're looking at high RSI readings on the daily and weekly. So not to say that it can't go, but this can be a little more defensive. It's still hanging in there. It's not. I don't think it's the end of the world that it's done what it's done in terms of, hey, this is really bad for the market, because too many other things are now starting to attempt to come along and are close to really participating. And one thing that could participate quickly, after reviewing it a little earlier, is this XLRE, because all you really need is to get above that 50 there in gold. It's a rising 50 in gold. The first way to do that would, of course, be to take out that resistance line, which you closed just under on Friday. And so all you need is a little bit more push here. If you get that, you're really there on, you'll be above all your SMAs. Your LTs are mostly rising. The shorties are flattening out. So you could have a nice SMA complexion, and like some people really like that. But this has been consolidating now, right, for a few months. So naturally, its RSIs are very reasonable, kind of middle of the roadish. Could very easily start back up again. And you can see just a little bit more push, and that could go. Now, XHB, this is just another one that it leaves me scratching my head, but that's why I don't base it off of my kind of gut opinions or just even research opinions. If the action is good, and that is really good action, that when you have a rally like this has had, and then you hold on to the gains the way this did, and then you kept really getting your ascending triangle kind of action going with your higher lows, and the market is acting as well as it did, and rates are not really spiking back up, then you kind of just need to stick with it. And you just can't really well, at the very least, I wouldn't fight against it. But I guess, oops, I don't want that. Let me just move this up to here. Put this right about there, just right about there. Well, it didn't move actually, but you get the idea. There's sort of a flat line there. There's your rising support line here. It's gone through. And so that's really a shallow pullback, right? They didn't really let that thing pull back all that much. So that remains strong. Again, it kind of leaves me scratching my head when I think about things, but and wood and cut, I'm going to say they look like they're trying to turn it around, but they're certainly not breaking out above highs or confirming. So that's a little bit strange, but we've been using them because I think we had a trouble getting random. Let's see if they let us get lumber, maybe lumber futures. Let's see if they let us get these. Yeah, we had a real problem before trying to get these. Yeah, it didn't like that. Yeah, it still doesn't really like that. Let's try LBS one more time. Sometimes we've had luck and gotten random length lumber, but no, it's just they may have changed their symbol, and I'm trying to get away from Thinkorswim anyway. So what about lumber futures? Anything? Okay, let's see where this is updated until, and it looks like it was updated. So yeah, they're wood cut, they're kind of similar. That's really not popping, but that's the XHB and XLRE. They've kind of been somewhat Teflon-y lately, despite what the lumber situation's been. Maybe, right, it's just that lumber's finally coming back in after the kind of extraordinary prices that we saw during the post-COVID, I guess, housing rush or boom. But anyway, this is obviously still looks really good and hard to fight against. If you want to be a bear there, the best thing you can hang your hat on is maybe that it's got a 72 reading on the weekly RSI, and maybe you're thinking this is a false breakout, which it could be. But I would still wait. I would have to crack my own support line right there, or the 20 there, which is right above. So you may as well wait for the support line to crack. And that's going to put you, right below the 20, which is at 90, call it 95-ish, right? But otherwise, at this point, I'm not fighting it. It just hasn't shown me to close at a high. So what are we doing here? Because I know there's a lot of people out there that are starting to want to fight this market. And I think there's good reasons for that. But if you look at the big picture, which is one of the reasons I do like to look at the big picture, look, this has just been an uptrend, and the uptrend's continuing, and they're trying to extend the uptrend and projects higher. So again, this is another great reason why, to me, my opinion is not worth chopped liver. It just isn't. I mean, I'd rather go with the charts. Beats my opinion almost every time. Let's see here. XLF, right? Another really important sector is there, right? Good flow. And with financial conditions being eased, I would, the most they've been in 2 years, according to recent reports we've come across, I would think they are. So the worst thing we could say here is that you've got a 73 reading on your weekly RSI. But the way things are going, right, I would expect they've got to try to at least attack the all-time high here. And if you look at this as a nice, strong post-COVID plunge, COVID response, ramp job, pullback, consolidate for a very long time, right? For really, you consolidated really for a year plus. Now you're emerging from that. So this is really sort of a breakout from a consolidation on the super big picture. And it's not overbought on the daily. It's getting there on the daily, but it's not overbought on the monthly, right? So if we drop back down to the daily chart, look at the daily trend. That to me it's tough to fight that. Again, we tried to put a few things in here and there when we saw some paper to kind of catch a little bit of a downdraft. But if you didn't take your swinging bunt single on some of those bearish little ideas, you probably lost. That's again just a great visual on how hard it is to be a bear when there's a strong uptrend, right? There's little opportunities, but again, I think you're better served by just waiting for pullbacks and then reversals, signs you see the momentum reversing back in favor of the trend again, and that's that's trend followers, trend trading. That's about as basic as it gets. But there's a reason why so many people look to do that. I think it's just because it's the easier road and it tends to work very well. Here's XLC. We're kind of getting into leaders, barely off the highs. You could say, well, what about your Bollingers? Aren't they wide? Aren't they stretched? Yeah, I mean it's overbought. 75 on the weekly. But again, I think you gotta wait it out and say what's it cracked. It really hasn't cracked anything in my book yet. So you've got to see something happen where you have some confidence. Yeah, this thing's really going to pull back and maybe close that gap. And that could be losing the 10-day there in white. But otherwise, right, overbought, but very strong uptrend. And so the only thing I think you could really do here is to kind of take this approach here, and you probably would have to trade against Friday's high, and I would put a little bit of buffer on that so that you don't just get out. Friday's high 79.42. I wouldn't if it ticks 79.43. I'm not out. If you really want to force a trade on because you think, look at those Bollinger Bands, look how wide they are. It's at 75 on the weekly RSI. It's this is crazy. This is stupid. I agree with you, but right, I just again learned this the hard way a long, long time ago. Thank God I did. Just because, right, you could really, if you just pick a random area to start shorting, you can really get chopped up bad when things are this strong. So uh, probably looking at you're probably looking at least getting below that very aggressive support line that I drew, 78.86, and you're going to have to add a little bit of a buffer onto there because again they're great at barely exceeding things and then going. So just be careful if you pick a fight with that one. I know again I've seen it out there on Twitter. Some people are itching to pick a fight. I think you need to just keep that on an extra short leash. I always say short leash, but I'd keep it on an extra short leash because when you go from a lot of things are super frothy already, some things are just frothy. But in my experience, when you are frothy and then you go to super frothy in other things and it really spreads out and kind of permeates nearly everything, that can be really dangerous to be early. You could get wrecked on a maddening move that makes no sense and isn't sustainable, but you can get wrecked very quickly in it to a great degree. So that's why I'm saying that. Look, another thing with just a nice strong push, nice little solid pullback, and then they're coming back after the XLK again, and there's room to go. I think there's room to the upside for this thing still. So it reminds me a lot of SMH, but maybe not as vertical. But to me, they've got room to go here on this one here and that one. And there's other lines that I think you could put in here. This is one of them. I've got that line drawn there. What I'll do is I'll move that one. We'll get ourselves up in here. And that might be a little bit closer if you want to pick a fight with something or you want to be smart about taking your profits. You're getting closer, and your Bollingers are very wide right now. But I still think projection wise, this thing to me could trade up. Now, Thinkorswim pulled the old price axis percentage switcheroo on me, but I think you could definitely trade up to here. You could trade up through there, but that kind of reminds me, just maybe because the prices are similar, a lot of SMH, but SMH is a little more vertical. Right now, you can see that kind of curl up there, and let's see if I can get a little, and I've got a line in there that's a little bit longer term that I like, that orange line that I highlighted in orange for this week so people could see it. But yeah, I think that's getting there, but I think it depends on how fast it happens, right? If they move this thing up very quickly, it doesn't have as much potential. For example, if they do it by, let's say, Tuesday, doubt it, but let's just say they tried. That's going to be one level, but you're even further, right? If you take your time and work up, and remember, NVIDIA is 10 days away. But to me, right, the fact that it kind of sliced its way through and just keeps slicing and slicing, I think it's really on the verge of going parabolic, right? It's very close. You can just see the latest slope that I don't have drawn, which I will, but you can just see that the slope can get more aggressive than it is right now. This slope here looks to me more aggressive than so, and that's for longer sustained time period. So if I try to put one here and then extend this up to there, there's an even more, excuse me, that's an even more aggressive slope right there. And I think, right, if you're going to go parabolic, they're going to put this thing on like a 70 something percent plus slope if they do push this there. But that's the thing, you kind of get these accelerations. That's why BMC, good old Brian McCormick, he uses other software. I think he uses TradingView, but he puts a nice radius on it so you can sort of see that the slope is sort of becomes ever increasing as the move wears on, and you kind of get to that super froth extreme. But that's what that's looking like right now. It's heading for potentially a super froth extreme. It is very extended beyond the Bollingers, so I ought to note that when you get this far beyond your Bollingers, it doesn't mean you just crash, right? But you often do get a pause, right? Like you did there. You pause for a while with a mild pullback. You kind of get to that point, and they sort of go with a pause for a while. Then you get a deeper pullback, and here you just got a pullback. You kind of reversed and pulled back. But usually, when you get a little more extended, let's say, than where we are now, you will get a pause or a pullback. What form that takes, I don't know yet, but it depends probably on how extreme it gets, what on its way there, in terms of how much more it would give back. But right, this is overbought no matter how we look at it. So if you ask me, and again, bulls never ask me, but if they did, I would say, look, the best you're winning, but the best way to keep winning is to pull this thing back a little bit, hold above the highs, and then start to go again later in the week as you move into NVIDIA week the following week. So all I would say is, like, have a brief pullback, then a pause, then start reversing it back up as you head into week's end, and then really run and gun the following week, and then do the exclamation point upside, take your breath away move with the NVIDIA EPS reaction, at which point everybody should be selling, and at the very least rolling to OTMs that are 30 delta, 35 delta, or even less, in my opinion, given how super frothy and extreme virtually everything would be at that point. But again, we're getting ahead of ourselves. But look, this is just overbought everywhere. The only place that it's not overbought too much is on the monthly chart, and that's still coming in at 72. Your weekly is 77. Your daily is 75, on its way to 76. So this is short-term overbought, longer-term overbought, really, really big picture overbought. So when you get to these, it doesn't mean you automatically go down. You can get more extreme. I'm just saying you got to be really careful. You got to be really careful, because the big dog is that one's got more projection potential in my book. I hate to say that. If you think, well, what are you talking about? Isn't this thing crazy already? And it kind of is, but this is just a counterintuitive thing when it comes to, like, you look at this daily chart, right? This is virtually like price action insanity. But notice how mild the pullback is, right? It's only really a pause. It's very minor. And that just tells you that it's super, super strong. And so this thing's worked its way through all of our extension levels quite easily. And so it would almost have to be a shock that suddenly, right, it would have to take some kind of a really serious news situation to probably derail this thing from reaching the 761.02 number we've got there. Now, what's the straddle going for out there? We're a little early. I think the earnings are on the 21st, but the straddle says between now and then, the implied move would be 720. It looks like it's going to be about 35 plus 40, we'll call it. So $75. So given the way they've reacted on things, $75 almost puts this thing, it's upside from this point, which is, again, premature, but you're up towards that 803-ish number, right? You kind of get up towards that kind of a situation. So now on the downside, clearly it could happen that way as well. That would probably be the ultimate psychological rug pull, which, again, I wouldn't put past the gang. But yeah, you could have a $75 reaction to the downside. That's going to put you somewhere near 650. Which did we stop and respect that level before? I can't tell because Thinkorswim has switched on me, but no, 650 is going to be what down 661's there. So 650, where's the highs? Right around here. What's that come out to? Yeah, that's below there. So 650 somewhere in here. So not really. I guess is somewhere near this 15 in at 646. So yeah, you could see that dropping back down there, but I don't think that's any magical number. And again, very premature right now. So don't even want to really get into it too much. But I think we've covered a lot of our stuff. We do often note gold and silver. I'll try copper for us right now. And again, this would be nice to see copper doing a little bit better. Maybe I don't know, maybe the stimulus, the latest round of stimulus out there, they're trying to get going. Different parts of the world will help, and it really hasn't yet. That's not really a good sign. Let's see. What about let's take a look at XAU for starters. We've been saying this for a very long time because a lot of people are interested, and I am too. I get why. I'm already long gold and silver. I own it in different ways. It's just I look at it as a hedge. It's something that I hope that doesn't really make me big money, and other things I have do. Right, that's what I'm really hoping for. But I just got some of it just in case, and we've been saying we were waiting for things to get better and better, and really this thing just continues to be a disappointing one. It just really does. So again, the best thing you could say is it's on its way towards being oversold. But I mean, that's not below all the SMAs, right? Just not a good looking chart. I'll look at SLV. I'll look at. I'm not. I'm not. I don't. I don't want to dissuade anyone from checking out things they're interesting in. SLV trying to make a higher low and rotate up. But look, the trend is still down. So, and let's take a look at GLD. But these are tough. I mean, I think I guess I should say it this way. I think you're prudent to put some money in these things for sure. As far as trading vehicles go, they're just not that interesting right now. We do get questions about them all the time. I'm not always right about everything. I'm just saying that from my perspective, we've been saying that they're just not that great in terms of trading right now. And there's so many other things that are strongly trending and making great moves that's why to me, you're better off just being in those kind of things rather than, or at least looking at those rather than focusing on an area that's just not, it's kind of like dead. It's kind of like, you're trading like, which should you really be trading utilities right now? Right? Like there's a reason why that's sort of like not people just do not trade them that actively. If they're just not that interesting to trade, sometimes they can be, but just like gold and silver, but they're just not. XAU, gold and silver ETFs, they just don't look that interesting to me right now. I, again, if they're really going, there's arguments that they should go and go and go, and I get that. And there's a lot of good arguments out there, and I probably would agree with a lot of them personally, but it's just not a great trader right now. That's just, we do look at it for that reason. People ask about it, but I don't think it's that great to trade. I think when we see more paper, and the charts flip, I'll be a lot more interesting. But I just have such a strong belief in charts that I need to see the stock having some kind of a predisposition to want to lift or something to want to lift rather than something that just isn't showing anything isn't showing much of anything. This is a little bit better, as you can clearly see that CL, right, the oil futures are trying to round up. They did kind of find support near where they have many times before over the past few months. This has been a dog as well. We kept seeing false signs of attempts here and there, and a lot of them, we luckily never got too aggressive with getting involved on the bull side. We tried to give it the benefit of the doubt here and there. It would really be nice to see in the sense that if there really is demand picking up, then that would be a good sign that the economies across the world are going to fire. I think you need to be dialed into the specifics of this market really to trade it the right way. I am not. I used to be a little bit more dialed in way back when, but just don't have the time for that. But what I would say is like, let's see, right, if it could take out these highs. That's a big deal because getting above the 100 there in white, the purple with the 200, and the rust color is the 150. If you get above there, you're right, all those, you're right above this high, and you have a slightly higher low put in. So that would be something constructive. And we did see some paper there, but there was a real nasty finish to XLE on Friday, as we covered earlier. So I think that's everything I can cover here in sector situation that we normally do. I think we took a look at mostly everything. Let me just end on this. Even though it's a little, it's certainly more of a macro measure type of a thing than it is a sector situation type of a thing. But I think when you look at this, I think I got all of the, maybe the formerly mag. Did I get Google? Did I get everything? Sometimes I skip over Google. That's my main skip over. Oh, I forgot NVIDIA somehow. There you go. Genius at work. How do you forget that one? So this is the Mag 7 now. And I was looking at these, earlier because they're so important to what's been happening. And I keep looking at this and you could say, are these overbought? They are. You have a 79 reading on the weekly RSI on this entire package. Remember, Tesla's sort of been dogging it lately. I don't have the specifics on the others, but this has been a real breakout, a real extension. But you're at 79 on the weekly, you're at 73 on the monthly, and you're at 78 on the daily RSI. Those are all pretty high, and they could get higher. But I think there probably needs to be a little bit of a pullback soon before it reaches this 100% projection. But if it reaches, I'm only mentioning that because people already think we're extreme, but having traded through 98, 99, and 2000, those to me were just more extreme. And these companies at that point were not the established juggernauts that they are these days. So if you're saying, can the AI mania take things to those heights? I would say it could. So I think you have to be on guard for that. Again, not a prediction, just saying that the degrees of frothiness can be a lot more than they are even right now. So I would still say in the short run, you're maybe due for some sort of a pause or pullback. But if the whole sort of news, interest rate, dollar landscape, if we just assume neutrality on those, there's still, to me, the way these guys are running and gunning, there's that potential for that final kind of super vertical, super frothy. Maybe, by the end of July, there's this incredible move that just absolutely blows your mind. Maybe it happens sooner than later. I don't know. So just be careful right now. Keep going with it would be my message. You be an aggressive roller and raise your DEFCON levels on everything. But I'm only ending on this because that what this does, if they do keep powering these things, is that gives a lot of these other parts of the market more time to get their act together. They're already starting, as we saw this week, to try to get their act together. And so if they do, then suddenly, right, things look a lot better. In other words, you have a lot more participation, something that resembles what a bull market has traditionally ultimately resembled. That's been a healthier bull market. And if that were to happen, remember, like we said before, a lot of things that look really kind of crazy and out of control in the short term can in fact become legitimized in the longer term. And this could be a case of that. I'm not predicting that. I still think the market is whistling past the Main Street's graveyard would be one way to put it. But whistling it is, and I would just keep trying to dance to this tune as long as it lasts, because I still think there's a lot of opportunity in here if they're able to pull off that kind of maneuver. And those sectors will also, that we talked about, they'll also have more time and they could also start to do more damage. So watch for the ones that perked up this week. A nice little pullback would be ideal for the ones that did, like XLY and XTN. But the names in there, if they have a nice little pullback, that would be great. And then if they start to continue to pull this thing back up again later in the week or starting next week, there could be another chance to get involved and catch another wave higher there. So we'll see. Hope that something helped you that we covered here this week. Hope that helps you in the week ahead or some week in the future. I want to thank everyone for tuning in and wish everyone a great conclusion to their weekend and a great week ahead. Thanks for stopping by.